All right, get ready for a deep dive, folks. Today we're taking a close look at Shilchar Technologies Limited, STL for short, an Indian company making transformers. We'll break down their business model, the sector they operate in, how they're growing, what gives them an edge over the competition, and of course, we'll also look at any potential bumps in the road they might face. By the end of this, you'll have a crystal clear picture of what this company is all about.
Sounds like a plan.
It is, and you're in for some surprises along the way, trust me. Did you know that STL is gearing up for a massive capacity expansion? And that's not all. They're experiencing remarkable growth in a sector that's, well, absolutely crucial for the future of energy. Yeah, there's a lot to uncover here.
I'm all ears. Let's hear about this capacity expansion.
We'll get to that, absolutely. But first, a little bit of background. STL manufactures a range of transformers, power transformers, distribution transformers, even those used in electronics and telecommunications. It's a pretty diverse portfolio, wouldn't you say? But what really caught my attention is their focus on crafting custom transformers. They tailor them to each client's specific needs. It's like they're the bespoke tailors of the transformer world.
I like that analogy. It really highlights a key point. STL isn't just pumping out generic products off an assembly line. They're diving deep, solving specific problems for their clients, which I imagine adds a ton of value.
Exactly. It makes you wonder what kind of efficiency gains or cost savings are their clients seeing because of these customized solutions. Something to think about, something to maybe dig into later, huh? But before we get ahead of ourselves, let's talk about the sector STL operates in, the Indian transformer industry.
Right. So the Indian transformer industry is, well, booming right now. Several factors are at play here. Increasing demand for power, driven by the country's economic growth, the government investing heavily in grid upgrades, and of course, the rapid rise of renewable energy sources, especially solar, which, naturally drives the need for transformers.
And speaking of renewables, it seems STL is really riding that wave.
Yeah.
I was looking at some figures, the growth figures for the Indian renewable energy sector in FY24, and they are seriously impressive. Looks like STL is playing a key role in India's push for a greener energy future, would you say?
They are, absolutely. What's particularly noteworthy is STL's focus on transformers that are specifically designed for solar energy integration. It's a niche area, no doubt, but it has massive growth potential. They've positioned themselves strategically, that's for sure.
Given their strong position in this rapidly growing segment, what's their market share looking like, I wonder?
Good question. The sources don't provide specific numbers, but STL's reputation for delivering these customized solutions, especially in the renewable energy space, it's likely giving them a competitive edge.
Okay, so we've talked about their bespoke approach and the booming sector they're a part of. But what else is there? What other advantages does STL have in this dynamic market that help them stand out?
Well, first off, STL has been around for a while. They've got 2 decades of experience under their belt. That's a lot of know-how in an industry as complex as transformer manufacturing. It's invaluable, really. And they've also made the strategic decision to focus primarily on private sector clients. That's led to a faster payment cycle and, reduced their credit risk.
Makes sense, especially considering the volatility of raw material prices.
Exactly. And speaking of raw materials, that actually brings us to a potential red flag. STL relies heavily on imported CRGO steel, which unfortunately exposes them to, currency fluctuations and the whole price volatility issue.
That's definitely a point to consider. Any other potential risks investors should keep an eye on?
Well, yeah, there's the issue of customer concentration. Their top 5 domestic clients account for a pretty big chunk of their sales, around 62% to be precise. So losing even one of these big clients, that could have a significant impact on their revenue.
That's a big chunk for sure. Seems like diversification might be something to consider. Down the line, maybe.
You're right, it could be. Now let's shift gears a bit. Corporate governance. The sources we've got, they highlight some interesting things about STL's board of directors.
Yeah, I was intrigued by the family dynamics there. Seems like the founder's son has a pretty key position on the board.
That's right. His name is Asha Shah. He's the founder's son, and he's serving as an executive director. His background is in electrical engineering and business administration. Seems pretty relevant to the business, wouldn't you say?
Yeah, definitely. But what kind of impact does his presence on the board have? Is there potential for, conflicts of interest or anything like that?
It's something to think about, definitely. While family involvement can bring valuable insights to the table, a long-term perspective, things like that, it's crucial to make sure there are checks and balances, to maintain objectivity and transparency.
Of course, makes sense. What about the rest of the board? What's the makeup like?
Well, they've put together a board with a good mix of expertise, it seems. Finance, production, marketing, engineering. And what I found commendable is they're pretty transparent about their compensation. All the details about executive pay, director sitting fees, it's all readily available.
Transparency is always a positive sign, isn't it? Suggests they have nothing to hide, and they're prioritizing accountability. Okay, so we've covered their business model, the sector, their advantages, potential red flags, even touched on corporate governance. What else is there to unpack?
Well, we haven't talked about sustainability yet. Seems STL is making some real efforts to manage their environmental impact.
Oh, right. You're absolutely right. I was just reading about their initiative to improve energy efficiency and cut down on water consumption. It's good to see companies taking these steps.
It is. And they're actually generating some of their own power, using a diesel generator and wind turbines. It's a step towards self-sufficiency.
That's impressive. Got to give them that. Seems like they're pretty proactive when it comes to sustainability.
They are. Plus, they're involved in a bunch of CSR activities, supporting social causes, giving back to the community.
All right, so sustainability is definitely on their radar. But what about growth potential? We've talked about the sector's growth, their competitive edge, all that. But what does the bigger picture look like?
Well, that's where things get really interesting. Remember that massive capacity expansion we talked about earlier?
Yeah, the one where they're planning to really boost production.
Exactly. Right now, their capacity is 4,000 MVA. They're aiming to ramp that up to a whopping 7,500 MVA.
Wow. That's quite a leap. They're clearly aiming for a much larger piece of the pie, a bigger share of the market.
That's right. And it's not just the domestic market they're after. They already export to countries like the US, Canada, and a few in the Middle East and Africa.
Interesting. So they've already got a global footprint.
They do. And with this capacity expansion, it seems they're ready to take their global presence to the next level.
Okay, so we've got ambition, a thriving sector, and a global vision. But let's not forget about the competition. Who are they facing off against in the transformer arena?
Well, the Indian transformer market, it's quite fragmented. You've got your big established players, those with strong brand recognition and wide-reaching distribution networks. They often benefit from economies of scale, and they've got a solid track record, especially in government projects.
So those are the heavy hitters, but it seems like STL is carving out their own space, right?
You're right. Their focus on customization and their strong foothold in the renewable energy segment, that's giving them a unique edge. They're not trying to compete with the giants on every front. They're picking their battles, playing to their strengths, and focusing on specific areas where they can deliver unique value.
Smart strategy. It's all about choosing your battles wisely, isn't it? Focusing on areas where you can really shine.
Absolutely, and it seems to be working for them. They've built a solid reputation, a loyal customer base, even with all the competition.
Okay, so you've got the big guys, and then you have a whole bunch of medium-sized companies. What about them? Where do they fit in?
While these mid-sized players, they often focus on specific regions or niche applications. Some might specialize in transformers for industrial use, while others might cater to, let's say, rural electrification projects.
So it's a diverse ecosystem with companies of all sizes trying to find their place.
It is, and STL, with their focus on customization and renewable energy, they seem to have found their sweet spot.
We've covered a lot of ground, wouldn't you say? We've talked about their business model, the sector, their growth potential, their competitive advantages, even delved a bit into potential red flags and their corporate governance.
And don't forget, we've also looked at their commitment to sustainability and those ambitious growth plans.
Right. But there's more to come. In Part 2, we'll delve deeper into their global expansion strategies, look at their financials, and explore the latest developments in their business. So stay with us. There's still much more to uncover.
Back again for more on Shilchar Technologies Limited.
And we're picking up right where we left off, STL's growth potential, their global ambitions. We know they're already exporting, and with that capacity expansion they're planning, seems like they're really ready to, step on the gas.
Absolutely. Right now, their production capacity is sitting at 4,000 MVA, but their goal, to boost that to a substantial 7,500 MVA.
Whoa, almost double. Talk about aiming high. It shows how serious they are about, becoming a major player on the global transformer scene. But what kind of strategies do you think they might use to navigate this increasingly competitive global market?
Well, one thing they might consider is forming strategic partnerships, teaming up with companies in key markets. Joint ventures, collaborations, things that let them tap into local expertise, existing distribution networks, that kind of thing. And of course, helps them navigate any regulatory hurdles they might come across.
Smart move. Combine their strengths with those of established players in new markets. Could really help accelerate their global expansion.
It could. Another path they might take is acquisitions. Actually buying up existing transformer companies,
Interesting.
especially ones that already have a strong foothold in their target markets, could give them a significant advantage right out of the gate.
Yeah, instead of building everything from scratch, they're basically leveraging existing infrastructure, customer relationships, all of that.
Yeah.
Faster route to market penetration.
Exactly. Of course, acquisitions come with their own set of challenges, right?
Yeah.
You've got due diligence, integration, all that. But if it's done right, it can pay off big time.
Calculated risk, potentially high reward. We've
Yeah.
done partnerships, acquisitions, anything else they might have up their sleeve for global expansion.
Well, setting up their own manufacturing facilities in key export markets, that could be a real game changer.
Now that's a bold move. But wouldn't that require a massive upfront investment?
It would, no doubt. But manufacturing locally has its advantages. Think about it. Reduced shipping costs. Those can be significant for big, bulky things like transformers.
Oh, yeah. Makes sense.
Then you've got potential trade barriers, tariffs, all that. Manufacturing locally helps sidestep those. And finally, it shows a real commitment to the local market.
It's a signal, like they're in it for the long haul, not just testing the waters.
Exactly. Plus, it can make them more competitive on pricing, delivery times, even after-sales service. It's not about quick wins. It's about building a lasting presence.
I can see how all these strategies could play out in different ways, depending on the market, Do you think they might end up using a combination of these approaches?
It's definitely possible. A multi-pronged approach, tailored to the specifics of each market, shows flexibility, adaptability.
Makes sense. Okay, let's shift gears for a bit and look at STL's financial performance. We know they're focused on private sector clients, which means faster payments, all that. But what's the overall picture like?
Well, their return ratios are impressive, cash accruals are healthy, debt levels are manageable, and they've got a comfortable liquidity position. All in all, pretty strong financial footing to support those growth ambitions.
That's good to hear. Strong financials are, well, they're essential, especially for a company that's, looking to expand in a big way.
For sure. Gives them the resources to invest in R&D, pursue strategic acquisitions if they want to, and weather any economic storms that might come their way.
Now let's talk about what's new, the latest developments in their business. We've already talked about the capacity expansion, of course. But any other notable updates, initiatives they're working on?
Yeah, there are a couple things. First, they've been investing heavily in upgrading their manufacturing facilities, bringing in state-of-the-art technology.
Smart. Got to keep up with the times.
You do. This is going to boost their efficiency, improve the quality of their products, and likely reduce production costs in the long run.
All good things.
And the second thing, they've been really ramping up their research and development, particularly in the area of, well, this is cool, smart transformers.
Smart transformers. Okay, I'm intrigued. Tell me more.
So smart transformers are basically transformers that are equipped with sensors, communication capabilities, and advanced monitoring systems. Think real-time data on grid performance.
Yeah.
It's a whole other level.
So it's not just about changing voltage anymore. It's about transforming how we manage and distribute electricity altogether.
That's it. And STL's focus on this smart transformer technology, it shows they're not just keeping up with the trends, they're trying to be the ones setting the trends.
That's exciting. Innovators, not just manufacturers. Okay, we've covered a lot. Global expansion strategies, financials, latest developments. But before we move on, let's circle back to competition for a minute.
Right. We touched on the competitive landscape in the Indian transformer market, but it's worth taking a closer look.
Absolutely. So who are STL's main rivals? And what are what are their strengths and weaknesses? What are we looking at here?
Well, like we said earlier, the market is pretty fragmented. There are some big players, well-established companies with a lot of brand recognition. They've got extensive distribution networks. They often benefit from economies of scale, and they've got a long history of working on government projects.
The heavyweights, so to speak. But STL seems to be carving out its own niche, wouldn't you say?
They are. They've got that focus on customization, and their expertise in the renewable energy sector really sets them apart. They're not trying to go head-to-head with the big guys on every front. They're picking their battles, focusing on areas where they can really deliver unique value.
Smart strategy.
It is. And it's working. They've built a strong reputation, a loyal customer base, even with all the competition.
All right, so we've got the big players on one end, and then we have a whole bunch of medium-sized companies. Where do those companies fit into the picture?
Those mid-sized players, they tend to focus on specific geographic regions or very specific applications. So you might have some that specialize in transformers for the industrial sector, for example. Others might be more focused on rural electrification projects, that kind of thing.
So it's a diverse ecosystem, players of all sizes, everyone trying to find their own corner of the market.
That's it. And STL, with their focus on customization and renewable energy, they seem to have found their sweet spot.
I think we've done a pretty thorough job here, wouldn't you say? We've discussed STL's growth potential, those possible global expansion strategies, their financials, the latest developments, even dug into the competition.
We've gotten a good look at where they stand in the market and what might be on the horizon for them.
But we're not done yet. In the final part of our deep dive, we'll be taking a closer look at STL's sustainability initiatives, and we'll talk about some of the challenges and opportunities that might lie ahead for them. So stick around, there's still more to come. Welcome back. We're wrapping up our deep dive into Shilchar Technologies Limited, and for this last part, we're turning our attention to something super important these days, especially for a company like STL, sustainability.
Yeah, it's a big deal for any business, really, but especially, like you said, for one that's operating in the energy sector. And it seems like STL is taking it seriously.
They are. We talked a bit about their initiatives to be more energy efficient and to reduce their water consumption, in the earlier parts. But I'm curious about the details, the actual steps they're taking, and how they're actually measuring their progress. What's the nitty-gritty?
Well, they've got a really solid energy management system in place. They're monitoring their energy use across the board, identifying areas where they can improve, and then implementing those energy-saving measures in all their operations.
Sounds pretty systematic. What kind of energy-saving measures are we talking about here specifically?
Well, they've invested in energy-efficient lighting for all their facilities, for one thing. And they've also optimized their manufacturing processes, really fine-tuned them to use less energy. They've even got a system to capture and reuse waste heat generated during production.
Wow, that's really impressive. It really shows how committed they are to shrinking their environmental footprint. It's everywhere, top to bottom. What about water? Water conservation. What are they doing on that front?
So they've implemented a rainwater harvesting system to cut down on their reliance on municipal water. And they've also invested in water-efficient fixtures and equipment, of course. Plus, they've, just like with the energy, optimized their production processes to use as little water as possible.
It's great. It's really great to see that they're looking at the whole picture when it comes to sustainability. They're addressing energy, they're addressing water, but sustainability goes beyond just managing resources, doesn't it? It's also about, being socially responsible, having ethical business practices.
Absolutely. And STL seems to get that. They have a really comprehensive safety program for their workers, making sure it's a healthy, safe environment. And they're really active in all sorts of CSR initiatives, too, supporting education, healthcare, community development, especially in the areas where they operate.
That's great to hear. It shows they're not just all about the bottom line. They want to make a positive impact on the communities where they work and on people's lives in general. It seems like they've really woven sustainability into their core values, how they do business every day.
I think so, yeah. And that's a really crucial step for any company these days if they want to be successful in the long run. Consumers are paying more attention than ever. They want to support businesses that are doing things the right way, ethical and sustainable. And investors they're looking for companies that prioritize ESG, those environmental, social, and governance factors.
It's not just a nice to have anymore. It's like essential.
Exactly. And STL seems to be ahead of the curve, really. They're not just doing this because they have to, they're being proactive. And that's good for the planet, it's good for their stakeholders, and ultimately it helps their brand image and gives them an advantage over the competition.
Wow. We've really covered it all, haven't we? We look at STL's business model, the sector, how they're growing, their competition, their corporate governance, and now their sustainability efforts. What a journey.
It has been. We've gotten a really clear picture of this company, their strengths, the challenges they face, and their vision for the future.
So as we wrap things up here, What's the key takeaway you'd want our listeners to remember about Shilchar Technologies Limited, if you had to pick one thing?
I'd say this, STL is a company that's really embracing innovation and resilience. They're committed to growth, but they want to do it responsibly. They're not just, along for the ride when it comes to India's economic expansion and their energy transition. They're actually helping shape it. They found their niche in a competitive market, focusing on customizing their products, being sustainable, and really delivering value to everyone involved, all their stakeholders. They're a company to watch, definitely, not just for their business savvy, but for their dedication to making the future better.
I couldn't have said it better myself.
Yeah.
That brings us to the end of our deep dive into Shilchar Technologies Limited. We hope you enjoyed it, learned something new, and, maybe got inspired to do a little deep diving yourself. Until next time, happy exploring.